everyone wants to talk about memes. They don't
Yeah.
understand it. This is such a bubble. All these people are stupid. And, a lot of these things kind of start out that way. And I'm not saying that these things are going to be worth what they are today forever.
Right.
But I think that there's room to run for them. And so, we're happy to be the guys that the CFAs
of the space
dislike or don't understand.
Yeah. Today's guest is Rennick Palley, the founding partner at Stratos. Stratos is a VC firm specializing in early stage projects, and the firm has also invested in some meme coins like Dogwifhat, Pepe, and Costco hot dog, not to be confused with a literal Costco hot dog. It's a meme coin about the Costco hot dog. I'm excited to talk to Rennick about the VC landscape, meme coins, how he looks at America today, given that we're both based in the US, and everything else. Rennick, welcome to the show.
Thanks for having me.
Thanks for being here. To start off, can you tell us how you got into this space? What made you decide to focus on crypto? We could go from there.
Sure. So I was working on Wall Street in 2015, and I was doing research on global financials. And I saw that there were a very large percentage of the populations in some emerging markets that were unbanked. And as part of my research, I was trying to identify technologies that potentially could enable people to be banked without using the traditional banking systems. And so, Ethereum was one of the things that I stumbled upon. And at that point, I thought it was a really promising technology. I was thinking about things like DeFi at that time before that was really a well-known term or any of these things had actually been developed, but it seemed to me like it was plausible. At the same time, I had also done a lot of research on just what the US fiscal situation looked like, the extent of long-term liabilities that the US and the developed countries had, both federal debt, but also other liabilities like pension underfunding and other things. And so my philosophy at the time was there's really no way out of this other than tremendous amounts of money printing. And that got me interested in Bitcoin. But at the time, I wasn't quite as interested in it as I was in the smart contract platforms in Ethereum, just because I think at that time, I felt that the Bitcoin idea was just too simple. I couldn't just be satisfied by the idea that that was the solution to the problem, and it in itself was going to be a massive asset over time. But that's when I started investing in crypto and eventually left the firm I was at and started Stratos in 2016.
Oh, okay. 2016 to 2024. So you've been here for a while.
Seen a few cycles.
Investing in crypto that long?
So I started investing my own money in crypto in 2016, and then started investing other people's money in crypto in late 2020.
Okay. So maybe more from 2020 to 2024. I've been in the space for that amount of time, and I feel like a lot of things have changed, especially from the venture capital landscape. I've spoken to a lot of VCs over the years. What do you think has been kind of like the most defining elements over the years, and how do you kind of change? Or I know a lot of VCs like to say they're long-term thinking and they hold their strategies. How do you kind of maintain your strategy then as the market changes and fluctuates so much?
I think that's a great question. I think the crypto venture landscape is really defined by the cycles. And the cycles, I think, in large part are driven by the halving. But typically there tends to be some kind of new technology that's developed alongside the cycles. So in the 2017 cycle, there was the ICO bubble, which you could argue is the technology, but really I think the technology was enabling the creation of lots of new tokens and 24/7 global trading of those things. That wasn't necessarily a new thing, but I think it was something that really caught on and captured people's attention. And that's kind of what drove that cycle. And obviously there wasn't a lot of VC at that time. It wasn't until between that cycle and the next, that I think things really started to take off on the venture side. Um, the next cycle, I think, was really defined by DeFi. And I think that really started to take off in the summer of 2020 with DeFi summer.
Mm-hmm.
And that to me was really the watershed moment for me deciding, okay, there's more to do in crypto other than just buying the liquid tokens. There's an opportunity to do venture because all of these new applications being built on, primarily Ethereum at the time are now raising venture capital. And so this is a different opportunity set than maybe had existed before.
Mm-hmm.
And I invested in the seed round of Compound Finance, which to me was something that I had been looking for years. I was hoping a protocol like that would exist. And so that was pretty eye-opening for me that you could actually build DeFi and it was going to work.
Mm-hmm.
And then when we saw TVL start to grow and obviously liquidity mining and other innovations catch on at that time, it became clear to me that crypto wasn't just a speculative asset, but it was actually going to create new applications. And I think this cycle, the thing that's captured a lot of attention so far are meme coins. And we're also starting to see AI start to intersect with crypto and coincidentally intersect with meme coins, which I think is one of the areas that's quite interesting. But people tend to think of it as kind of like it's a toy today, right? They're just,
Mm-hmm.
Agents like GOAT and Cerebro and virtuals. But I think over time, we're going to see how that plays out into actually having on-chain agents that do things other than just shill their own coin. Now, I think the through line between all of that is actually that the underlying platforms, the layer one blockchains and now layer twos are the things that end up actually accruing most of the value.
Mm-hmm.
A lot of these other things are more ephemeral, but these blockchains that have existed for a long time continue to increase in value, at least in dollar terms. Very few actually have increased in value in Bitcoin terms, which is kind of a different discussion. But meanwhile, a lot of the applications built on them kind of come and go each cycle. And so for us as investors, we've primarily been focused on that layer one or network level opportunity set. And that's something that we plan to continue investing in. And if you look at the valuations relative, especially on a revenue multiple basis, which is not necessarily the right way to look at it, but it's just an interesting data point. Networks tend to be valued much more highly than applications. And I think there's a good reason for that based on what I just said, that they have this certain longevity to them that dApps really don't.
I feel like networks get high valuations before they even launch, though. And then it's like, can they really even live up to that hype? You know what I mean?
For sure. Look, I think our focus as VCs is to invest at the very early stages. We're typically the first investors. So we are not the ones marking these rounds up to very high valuation,
okay.
PGE or pre-mainnet. But I think that the truth is somewhere in between these things being very overvalued and then there kind of being a rational argument as to why they should be priced this way. So as I was saying, like on the rational argument side, Ethereum's worth hundreds of billions, and the next closest is Solana at over 100 billion, and then there's a kind of power law function of the rest, and they're still in the tens of billions, many of them. And so it makes sense as a venture investor if you can deploy large amounts of capital at $1 billion round, and you have a very large fund and you need to write $20 to $50 million checks at a time. It makes sense that you would do that based on the hope that the project you're investing in could eventually attain that valuation. I think at some point there could be a quote unquote like day of reckoning in the space where people say, look, the nth next L1 does not need to be worth $10 billion because there are so many other L1s and none of them have any real activity. But I think that's kind of a mid-curve take, because if you look at like what's happened recently, all the Dino coins are pumping. And the reason why XRP pumped had nothing to do with the activity on XRP.
What do you think it is?
Well, it's essentially a form of cult, right? There are
Hmm.
people who've been diamond handing XRP for years,
Yes.
and they believe in this thing more than they believe in any element of existing capitalist society. And as soon as the election happened and it became clear that XRP wasn't going to be regulated as a security anymore, I think that was the thing that really allowed it to unleash. There was just
Hmm.
some narrative that entered the market that was bullish for XRP, and off it went.
Hmm.
And so I think when you look at these things, they're really just trading assets, in the sense that they have a lot of trading volume. There, people around the world can invest in them. And yeah, I guess there's like this kind of loose premise that one day they could become an Ethereum like transaction layer. And because of that, they have the potential for being very valuable. But I would categorize them all as sort of like this idea of monetary assets, which is to say that they've never been intended to be valued based on some like discounted cash flow analysis, like what you would see with a stock or even like a DeFi DApp, for example.
Hmm.
They are their own sovereign monetary idea. They have their own monetary policy. They'll exist into perpetuity as long as there are a few people running nodes for that network. And so, from that sense, they're kind of this different thing. I'm not saying that today the price should go up another 10x or that it should be down 90% from here. I'm just saying that these things kind of exist within their own universe, if you will, and they kind of trying to ascribe some rational valuation to them, I think, um, is not necessarily the right way to look at it.
Yeah. I think also I keep getting notifications from like Coinbase over email. I don't know why. I don't know how to turn it off, but it's like, oh, this coin is up X%. And it's like a token I haven't thought of in years, you know? And then I'm like, okay, that's got to be like retail in my mind because these are certain things that like no one really in the crypto sphere talks about, but yet it's pumping. And I'm not talking about Ripple. I'm talking about like, I'm not going to name names, but there was one, for example, like Bitcoin Cash, where it's like nobody really talks about Bitcoin Cash anymore, but it was like up 10% one day. And I was like, I haven't seen that thing move in years, you know, but it's like the current cycle that we're in. And I think, you know, there's utility to be had with some of these cryptocurrencies. And then with others, it's just like people, they download Coinbase because someone told them to, because crypto is going up right now. And then they go and buy whatever's on the home screen. And maybe that's kind of like a proliferation of it all.
I definitely think retail is some element to it, but I also think that there's a quantitative aspect to this where all of the coins tend to trade with some correlation matrix to all the other coins. And so when you have the leading 10 start pumping, then you have the rest that are going to follow suit. And
Yeah.
to some degree, there's market makers who ensure that that correlation is maintained. And then there are quant traders out there who do the same thing, who basically say, look, if Bitcoin is pumping, the likelihood that Bitcoin Cash is going to pump is 80%. So let's buy this now, and they drive the price up. And then retail comes in and sees that the price is running and outperforming Bitcoin the last week. And, oh, you know, it's $500 a coin instead of 100,000. I'm going to buy this unit bias. And there you go. And it kind of proves the point that the fact that these things all trade and have such high volume and, you know, are accessible globally is part of the value prop and why they're valued in this way, not because of their on-chain revenue or something like that. What's
your meme coin take? I know I was told before we started recording that you have bought meme coins. I talked about it in the intro. I believe you bought Dogwifhat at like a cent. I went back and looked and I bought it around like 10 or 15 cents. At the time of recording, it's around what, like 350, 340, depends on the day. I think it peaked around like 450. So that's just one of them. What is your overall general take on meme coins today? And then we could go into kind of like why you even started investing in them.
Yeah.
Also not financial advice. We're just having a chat.
Everyone buys with at the price they deserve.
Ooh, that's tough. That's something they have to live with. Yeah.
So you did well with that. I think I can talk about our WIF thesis, but generally, we think that meme coins kind of fall into the same monetary asset category that I was just describing with L1s. So, like, the beauty of L1s is they can be priced based off of the community and not because of some revenue expectation because of what I was just discussing. Obviously, it's better if there is more on-chain activity than not, as we could see with like Solana versus Ethereum this past year, for example. But um, meme coins are almost a more pure monetary asset. They're actually closer in some ways to Bitcoin than other L1s because
That's
there is no
interesting.
revenue. This is intended to be a cultural idea that unifies some subset of the crypto community. And they really have uncapped upside. Look at Doge or SHIB or the other kind of like blue chip memes. And so they're a highly levered version of Bitcoin in that sense. And if you think Bitcoin is going to do well, then the memes are going to do even better. And that's been our thesis in our liquid hedge fund. Our view was out within the alts category, meme coins are likely to outperform everything else. Now, that has been true, but the challenge is picking the right ones.
Yeah.
And so there's, really kind of like two different games being played. There's the go in the trenches and play on pump.fun and try and find the next whiff.
Good luck.
Or,
yes.
yes, it's very challenging. Or it's trying to buy the blue chips and buying things once they've kind of established themselves, and you can start to see some of the holder metrics and attention that they're grabbing on Twitter, and using that as a way to understand like how strong is the community and how relatable is this idea to normies and people who might be coming into crypto over the next year, and are they going to end up buying our bags? And so I think, talking about WIF specifically, this was before the meme coin boom really happened. So I think it was easier for us to identify why WIF was unique. We had looked at Bonk, and we had bought Bonk, but not in enough size. And we were a little bit frustrated by that. And we felt that it was likely that there would be sort of a Bonk echo on Solana. And so when we came upon WIF, we decided that that was likely to be a strong contender for that, given that it was a dog, but it had a hat, which made it unique, and it was very low market
Dog
cap.
with a hat. Yeah.
Yeah, very memeable. So we bought it at around a cent and then held it, and then started seeing people on Twitter posting, pictures of people with the hat on, changing their profile pictures to the hat. And, that actually kind of built our conviction. And so we did take some profits on the way up, but we're actually holding the vast majority of the position, just because the underlying fundamentals, if you will, improved along the way so substantially.
Yeah. How did you know in the beginning, though, that WIF would be like a good bet? Or I guess you didn't know, but like what made you really think it, aside from like the memeable fact? Because there's so many quality memes out there, but that doesn't necessarily translate to a good meme coin. You know what I mean?
That was before Pump.Fun really took off, and there was like massive proliferation.
That is true.
Memes. At the time, we're like, look, and this has continued to be our philosophy. The asymmetry in low cap memes is unlike any other asset ever, especially in terms of the time frame that these things play out. And so if you want to put a small percentage of the portfolio into something, it's always about position sizing. So we're willing to take a very small risk on something if it's a low market cap, in hopes that it can be
explode,
a WIF-like outcome. But we do that fairly infrequently, only when we feel like there's reason to have a lot of conviction. And again, it was a very different world in December of 2023 when we bought WIF than it is today.
Right.
So the last meme coin that we bought early in size was GOAT. And the reason why we felt confident there was it was kind of the beginning of a new genre, these AI agent coins. And the underlying lore there with Mark Andreessen giving it money and, talking about it was really like a completely new thing. And obviously lore is very important in the meme world. I mean, the Satoshi lore is for Bitcoin is incredible. the fact that the WIF dev rugged himself, sold all of his coins, and at a very low price is great lore, because it's kind of the inverse of Satoshi, if you will. And then the Mark Andreessen sort of like GOAT thing is fantastic as well. So we looked at that and said, this is really unique and interesting, and bought it. And, to be honest, we saw it and really liked it, and then hesitated for like a day. And that cost us a lot, because
I was going to say it probably moved. Yeah.
But still we caught it, at a order of magnitude lower than what it is today.
Mm-hmm.
So that was a good trade.
So between, let's say, December of last year to December of this year, 2024, almost 2025, I think also the meme coin landscape has changed a lot. And it's also just like highly saturated. It's really hard to pick like which one do you think is going to be good. And if it's even going to be good for like more than a day to a week to whatever, right? So do you still look at it as like an opportunity, or is it just kind of shooting in the dark at this point and it's really hard to tell which ones will succeed, especially from like the early like launch moments of a meme coin? Because like now you could kind of look at them and say, okay, it has a quality like market cap, there's a lot of volume, whatever. It could be a safer bet, but it won't be like the returns that you would get when you get in when it's below like even 10 million market cap.
I think it's really hard. There's just so many new memes, so many existing memes. I think the landscape has completely changed from when we were in December.
Mm-hmm.
So the way that we're playing it now is, we think the meme concept is not going away. It's going to be very powerful this cycle. Our preferred bet is to just own large positions in the blue chips. So we've been very overweight Doge, Pepe, with GOAT, and basically saying, what are the category leaders? And owning those in size, with the view that they're maybe not going to perform like the next WIF from a 10 billion market cap to a 3 billion market cap. But they will outperform the other major L1s and Bitcoin from here to the top. And so it's, like I said, a levered bet, but on a risk adjusted basis, I think a lot easier to get right than trying to construct a portfolio of sub 10 million market cap memes.
Mm-hmm. So you've made some bad bets, I'd assume.
We've had some things that didn't work out.
Yeah.
But again, we start, it's all about position sizing, because the asymmetry is so significant that, we're willing to bet 25 or 50 basis points of our liquid fund in a new meme. And if it doesn't work out, it doesn't matter. I mean, the daily volatility of the crypto space is 200 or 300 basis points. So a 25 to 50 basis point bet is really immaterial.
Mm-hmm. Yeah. No, that makes sense. Very interesting. Okay, cool. I've never really sat down with someone on the podcast and like talked through meme coins with them. I think we've like joked about it. I'm in the meme coin space, like I see value in it. But to actually have like a sophisticated analysis on it, much appreciated.
I think calling it sophisticated is charitable, but
yeah. Okay, well, it's more sophisticated than how I would look at it. I'd be like, that dog has a hat. I like that. And that's honestly how Dogwifhat took off, and sure, there are people who did like financial analysis over time, but
there is no financial analysis we had, just showing people and thinking, like, do you think this is cute? And they're yeah. Okay. So there's relatability to this. That's like the extent of it. But I think we try not to project any kind of moral or philosophical like judgment onto memes. It's really just a question of like, what do the price charts look like? If the asymmetry is there, then it's something that we should be paying attention to. And I think a lot of people, one of the reasons why we're still bullish on it is because it's so contentious. Everyone wants to talk about memes. They don't understand it. This is such a bubble. All these people are stupid. And, a lot of these things kind of start out that way. And I'm not saying that these things are going to be worth what they are today forever.
Right.
But I think that there's room to run for them. And so, we're happy to be the guys that the CFAs
of the space
dislike or don't understand.
Yeah. It kind of reminds me like of they're not the same, but like NFTs were really cool last cycle. Now they're like kind of making a comeback, but not to like any magnitude that they saw last cycle. And my concern maybe is that like meme coins is what's cool this cycle, but then maybe next cycle, like they'll still exist, but they won't have the same like avalanche that they did this cycle, and I guess we'll see.
Yeah, I think the analogy is appropriate. I think there's definitely some differences, as you said, but a rock just sold for $1 million.
I saw that.
So there are blue chips in the memes in the NFT space, and I think we're seeing the same thing in memes as well. There are things that really differentiate and get to critical mass, and then the rest is just kind of just going to go to zero or not going to be worth as much. I think memes are generally better than NFTs though, because
it's also more attainable too.
Yeah. They're fungible. They're extremely liquid. I mean, if you look at the volume charts on CoinMarketCap or wherever, oftentimes memes trade at higher volumes than even some of the bigger L1s. So they have the highest trading volume as a percentage of their market cap than any other tokens in the crypto space. Whereas NFTs, they're extremely illiquid. So, but look, punks and rocks and some of these other things have made a resurgence, and I think that kind of proves that they're here to stay. And I think we'll probably see similar things next cycle with, obviously Doge. If you look at the value of Doge in Bitcoin terms, it's one of the only crypto tokens that actually makes new highs against Bitcoin cycle after cycle after cycle, which is really quite remarkable when you consider the long-term returns to Bitcoin and how it's pretty much outperformed every other asset, even a lot of assets in crypto.
Do you have Doge?
Yes. Yeah. It's one of our biggest positions in our fund.
All right. So you're a believer in Doge.
I mean, I think it's hard not to be. There's a government agency named after it. It's
I know, Mr. Elon.
This is the best possible timeline that we could be living in crypto. It's really insane.
It is insane. And if we talked about this like 6 months ago, I'd be like, no, it's not a possibility. I think also on that front about like the opportunity in America right now, I keep seeing accelerator programs, VCs, founders saying like they're telling teams and or deciding to come back to the US. And that's something that it was the opposite. It was the inverse prior to the US presidential election. Like founders were thinking about leaving, if not already left, because of kind of the turmoil or the hostility towards crypto in the space. I'm curious from your perspective as a crypto VC, what are you kind of seeing? And are you talking to founders about bringing them back to the US? Are you focused on the US?
Yeah, I mean, speaking personally, I always had faith that the US would shift. I didn't think it would happen so quickly or so, with such a binary outcome where we shift from being so anti-crypto to everything being pro-crypto. I think if you just study the history of technology, it always wins. You can never keep technology from growing and becoming what it's intended to be. It's kind of like, think of water in a valley or something. It will always find the lowest point. So it was just a matter of time, especially when you look at crypto and it becoming a $3.6 trillion asset class in 15 years of being created. Nothing else has had that level of compounded growth ever. And so it's just a matter of time before the value that's been created is used to create political influence, because at the end of the day, it's money that drives that. And that's exactly what we saw happen. So I think in retrospect, it's easy, I think, to ascribe that kind of narrative to what happened. But again, I think it's remarkable just how clearly that played out. From our perspective, in terms of investing, we never encouraged teams to leave the US. I never considered leaving the US as a VC. Again, I didn't think it was going to last forever. But we invest in teams globally. And we've had teams that have I would say the majority of our portfolio is not in the US, but that's not really intentional. It's just based on who we've met, the founders that we liked and wanted to back, and the projects that we thought were interesting. That being said, I'm very hopeful that we're going to see a lot more projects in the US going forward,
Mm-hmm.
and especially if there are significant tax incentives. So we'll see.
We shall see. Yeah. I think on the global perspective, I'm curious when it comes to investing in different founders around the world, do you see like a specific focus in each region? Like you're really seeing a lot of proliferation in like maybe, I don't even know. I'm going to ask you more so, but like a certain like payments in one region and then maybe like DEXs in another and DeFi, or is it kind of like across the map? Every region does it. And it's just, unique to each. Am I making sense with my question?
Yes. We've seen a lot of gaming in Asia.
Yes.
We don't really
I've heard
invest in
that.
gaming.
Okay.
So we've seen it, but we're not really invested there. We did make one social investment in Asia just because our view was the Asian population is much more likely to engage at a high level with crypto social than the Western population until the West is able to, create kind of compelling consumer experiences that feel like Instagram or Twitter or TikTok on chain. It's not really going to happen. So otherwise, things are, I think, pretty evenly distributed.
Mm-hmm. And are there specific sectors right now that you're pretty bullish on that either emerged this market cycle or were not that cool last market cycle?
I think the stablecoin opportunity is going to be massive in the next few years. And the reason for that is historically, nobody really wanted to transact with stablecoins in the real world because they didn't trust them. Every time you read about stablecoins in the Wall Street Journal or Financial Times or whatever, the narrative was this is used for illicit activity. No one knows if it's actually backed by anything. The US government hates this. We need a central digital currency. And I think today we're going to see that change where there's going to be some actual stablecoin legislation and people can trust that a stablecoin is actually backed by treasuries and there's some kind of framework around it where you are certain that it's fungible with treasuries 24/7 and it really is a US dollar. And when that happens, people are going to want to use it for day-to-day transactions because it truly is 10x better than the existing fiat rails. And so when that happens, you'll see people buying coffee with stable coins linked to Apple Pay. I mean, just in the last couple of weeks, we're starting to see a lot of things there where, the Stripe acquiring Bridge, there are a couple of different wallets where you can send USDC directly to a bank and a bank account, and it gets converted into dollars and vice versa. Mm-hmm. And so we're really close to having that kind of, Visa or MasterCard experience, but with a crypto wallet. And so I think that's going to be a big onboarding. And if you look at stablecoins today, they have hit about 175 billion in market cap. And I think we could see that easily go to, hundreds of billions more. Mm-hmm. And that ultimately ends up flowing into, the riskier crypto assets. And so it ends up kind of levitating the whole space. I think the biggest winners there are actually going to be the existing L1s and potentially some new L1s that we're looking at. But, on the application layer, some will, DeFi is going to benefit from that as well. But as I mentioned earlier, I think from an investment perspective, the returns are going to be higher to the platform network layer than to the application layer.
Mm-hmm. On the front of L1s, is there a specific blockchain that you find yourself kind of gravitating towards more or maybe away from?
I think that the death of Ethereum has been highly exaggerated. I think that there's still a lot of merit there. I think that the design philosophy of trying to be truly decentralized and scalable with, easy to acquire hardware is important. Obviously, it doesn't necessarily lead to the best consumer experience today. But I think it's great that there is an alternative with something like Solana where, you could argue it's a little bit more centralized, but is a much better user experience. I would say that we're largely agnostic, but we've been significantly overweight Solana since the summer of 2023, whereas we've been underweight Ethereum.
Mm.
But that's more of a price action view than it is a philosophical view around which one is better or more aligned with crypto. I think they both can exist.
Mm-hmm.
And I think it'll be interesting to see some of the even more performant L1s launch. Things like Monad. We're a large investor in Fuel, which is a parallelized L2 that's launched mainnet recently and is doing really well.
Mm-hmm.
So it's exciting to see some of these new things launch. I think we're not going to really see what works and what doesn't until we see kind of a market cycle top. Because if you look at last cycle, it wasn't clear what was going to break and what needed to be fixed until you could kind of see what happened in 2021. And people weren't that interested in layer twos, for example, until they realized that some of these other alt L1s that were EVM clones wouldn't really scale either.
Mm-hmm.
And so I think it's going to be a very interesting next 12 months to see, what the next frontier is going to be in terms of network design.
Mm-hmm. Yeah. With the types of founders that you invest in, what do you look for in a founder? I love asking investors this because I feel like there's similarities, but there's also differences, right? And like, sure, you're investing in idea, but you're also investing in people. And someone could have like the best idea in the world, but be like an absolute nut job. And I would assume you wouldn't invest in them, or maybe you would. But what do you kind of look for when it comes to founders?
Yeah, we're not necessarily deterred by nut jobs.
Well, there's like a difference between like, oh, that guy's crazy, he's going to change the world. And like, that guy's crazy, I would never give him like a red button, Yes. So.
Yeah, I think in order to be a founder of something that is really groundbreaking in crypto, I think there needs to be an element of differences from the norm, let's call it. People who see the world a bit differently. However, the challenge is finding someone who is both a visionary but also can execute. And I find that there are two successful founder archetypes in crypto that we look for. One is the visionary who's a domain expert who's maybe spent the last 10 years in the space and knows everything that there is to know about the technology that they want to improve. And the challenge with that type of founder is they need to have the right kind of team around them to help them manage, because a lot of times as a visionary like that, you're not really a manager. And so I think we saw this happen quite a few times in 2021 where a lot of capital flowed into the space and these types of founders were given huge amounts of money and they felt compelled to grow their teams and hired a bunch of people and then were really struggling with managing. And so that can be a very powerful leader, but they need to have the right team around them. And then the other type is just the person who can really execute and hustle. So maybe they're not the same level of domain expertise, but they do have a clear vision and they're set on seeing it come to life. And they have a track record of being able to execute and make these things happen.
Mm-hmm.
And when you see those things come together on the same team, that's even more powerful.
Yeah. Does that play into technical versus non-technical founders? I think what you were saying kind of does, because it's like some of them have like this characteristic, they don't really carry that,
I mean, I think in the founding team, there needs to be a strong technical person, especially for what we invest in.
Mm-hmm.
If you're building more of a consumer app or, smart contract layer app, I think you can get away without that. But if you're trying to develop some sort of novel L1 or L2 that is going to help improve scalability or do something different, it's really hard to do that without having a technical co-founder or someone heavily technical on the team.
Yeah, for sure. Are there other emerging sectors or opportunities that you're paying attention to now that you think maybe others should?
I think DeSci is interesting. I think it has the potential to really improve the world.
Hmm.
And I think the future of scientific research and funding is probably lies in something that looks like that. Um, it's not something that we've been actively investing in yet. I think as I said earlier, the intersection of AI and crypto is very interesting. I think there's a good argument as to why a lot of the AI ecosystem should be built on chain and that we'll see it on chain. And I think an interesting analogy to that is just looking at what DEXs have done in terms of aggregating volume versus centralized exchanges. And the centralized exchange is the traditional mechanism of enabling transactions. And if you look at the percentage of actual crypto volume that is transacted on DEXs, it's slowly increased over time. And I think it's somewhere around 35 or 40% today because of the unique benefits of using a DEX over a SEX. Um, and I think we'll see the same thing start to happen with AI, where you can use distributed AI, distributed inference, various things that crypto enables that is unique for AI workloads. And, that will start at a very small percentage of the total AI. And then over time, it will become more and more meaningful, especially as some of these technologies on the AI front plateau or their speed of improvement slows down. And the distributed versions can catch up or at least be, a model behind, but where being a model behind is a much less significant performance sacrifice than what you'd see today being a model behind.
Yeah, that makes a lot of sense. And I feel like the whole AI blockchain conversation is something that we talk about a lot on the show. And if we had more time, I would 100% ask you 50 more questions on that. But the last question I'm going to ask you, Rennick, is if you could leave us with a piece of advice, something that you've carried with you throughout your time in this space.
Good question. One thing that I've been thinking a lot about lately is position sizing. I think a lot of time goes into deciding on what position you want to take, and not enough time goes into thinking about how to size the initial position. And so I think just being thoughtful around that and kind of overlaying the probability distribution of outcomes of a particular asset with your own risk appetite, and then using the sizing appropriately. There's this thing called the Kelly criterion. I don't know if you've heard of it, but it's basically this. In quantitative finance, there's this idea of mean variance optimization, which is basically I'm going to construct a portfolio and size my positions based on how I can maximize each unit of return that I can get for each unit of risk, where that risk is defined as volatility. And the problem with that model, which is what most people use, at least when, in traditional institutional investing, is it's only takes that into account over one time period, and it assumes that the probability of return, the distribution of returns, is a normal distribution, which is not true. There are much fatter tails in returns, especially in crypto. And so the right way to look at it is over a multi-time period. And so that's what the Kelly criterion takes into account. It's actually optimizing around the log of total wealth rather than optimizing around units of risk over the next period. And so it's a really interesting framework for thinking about position sizing, and I would encourage people to check it out.
Amazing. I'll look at that after this episode. Great.
Cool.
Well, Rennick, thanks so much for coming on today. It was an absolute pleasure. Really enjoyed it.
Thanks for having me.